ladies and gentlemen, boys and girls, children of all ages, I appreciate all of you for tuning in tonight.
I for one and one for all, about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah. All for one and one for all, we about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah. Now I'm about to get it started. Don't be an adversary, cause we'll leave your ass departed. We do it real, yeah, there ain't no other way regardless. We is the rawest and hardest, but yet we steady remain flawless. So pick a cemetery, best believe we very scary. We shred them up and bury, pray to Jesus Christ and Mary, that we don't turn on you and leave your body bloody blue. If we get a hold of you, there ain't no telling what we do. I for one and one for all, about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah. All for one and one for all, about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah. Suited up, booted up, ready for action. But we clashing, I'ma never give up and you get no reaction. You lacking the passion, it's apparent you bitches ain't ready for war. So I even acted, no fucks I be giving, I'm ready and willing to raise up the ball. Push it to the center, let's go. Yeah, you know we come from way beyond. Got a pattern on, young Padawan. Had to fuck the world with no kind of on. Got a couple loose screws so my mind is gone. With the vibe I'm on, I've been gone so long that anybody talking for to get two to the dome. I'm talking chrome, we throw hands, break bones.
Can I get a hallelujah in here? Hashtag amen. That's what I need right there, guys.
I for one and one for all, about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah. All for one and one for all, about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah.
It's all over with them. They can say what they want, but proof will set you free. Can I get a hallelujah in here? Hashtag amen. What is going on, everybody? It is your boy, the Crypto Country Boy. We are back again, guys. I want to say thank you very much for everybody that is tuning in. I have been telling you guys for quite some time now that we were going to have a special guest here. And I know it was last second, but I was like, man, I want to do something different. And, you know, so I contacted my old blackjack buddy, Mr. Mad Dog over here. And, you know, we decided that we're going to go ahead and break you guys off a little something with some options trading. We've been talking about it for quite some time. And tonight, what we're going to do, guys, is we're just going to do a brief introduction to what is options trading. How does it work? You know, how do you make money? Different things like that. What's up, Wayne, my brother from another mother? Literally, you know. So, guys, we're going to teach you guys. We're going to have this series. We're going to start a playlist on the CCB network. And you guys will be able to go on with special guest Mad Dog on how to do options trading. Mad Dog, thank you very much for coming in with us today. How you doing, buddy?
Doing good. How's everybody out there today?
Doing good. All right, guys, so this is literally his first time being on screen with us. So take it easy. Be easy. All right, women, don't make me beat you off with a stick now. Okay, so, you know, but guys, if you guys seriously want to learn about options trading, how to make a six-figure income doing options trading, we're going to learn together live here on the CCB network, and it's not easy. He's not easy on me. Lord have mercy. All right, guys. So, Mad Dog, tell me a little bit about your experience with options trading, how long you've been doing it, and if you don't mind, you know, I guess kind of let us know how it's working out for you.
Okay. Basically, how I got involved with options trading is I always was interested in how to make extra additional passive income. And I own a small construction business, and I happened to be doing work for a gentleman that traded stocks and options. And he offered me a chance to sit with him and learn from him in exchange for some of the services that we provided for him, that my company could provide for him. And so I started out just basically buying and holding stocks. I started that before I ever met him, just, you know, doing my own research, buying good quality stocks and holding on to them. When I met this gentleman, I explained to him I was doing that. We just started talking shop, and he explained to me about options. And that was probably about 9 years ago. And so since then, I've been trading options pretty consistently for the last 9 years. I have no financial background. Like I said, I have a degree in residential construction management. I manage guys and I manage jobs in construction. So I do really well at putting it into layman's terms, if you will. So that's helped me be able to teach some other friends of mine options as well. So that's kind of my history. They weren't all winning years. They were not very many loser years either, but it took me a while to gain my footing. And so hopefully if you listen and you pay attention, you take your time, you can avoid some of the mistakes that I made.
Okay. So we've already got, and I don't even know what this is. You know, when I say, you know, I'm not here to teach you this, guys. This is Mad Dog. Health Wrap says perpetuals is easier for beginners.
I'm not familiar with that term, but again, guys, I don't know everything. I'm not a licensed broker. This is not financial advice. This is just sharing with you some information that I've learned.
You know, you learning from someone that did really well, and then 9 years of you practicing what he told you. Is that pretty much
and picking some things up, picking up some things on my own, doing some own research and adjusting my techniques. But the foundation started with him, with his knowledge.
Now, so now is this something that, you know, I need to have like a TD Ameritrade account with, or do I have to have you know, what's all these other ones that you see on TV where you don't have to go through Edward Jones or something? You know, what do I need to get started doing this? At least
basic
exchange site-wise.
Well, a good place to start is E-Trade. That's a good place to start. You can also start with but the platform I use is called TradeStation. They offer a lot of different securities, a lot of different that's what I'm looking for.
Okay.
Vehicles to trade. Futures, stocks, options. They run the gamut. And so I also trade futures as well. So I feel very at home with TradeStation because they offer a lot of different trade with. So.
All right, so there's the link in the chat, guys. If any of you guys want to go and check out TradeStation. Now, is TradeStation noob friendly, or is it something that you got to build?
They have a lot of good information for new guys.
Okay.
So they have a lot of videos that you can watch and pick up on the basics.
Okay. So, do me a favor. Break down exactly what exactly is options trading? What two options am I, you know, is this an option between, you know, with or without cheese? You know, is this like salt or not salt? What exactly are options?
Basically, options are traded on, first of all, not every security. And when I say security, I mean stock like McDonald's, Apple, you know, Verizon, those kind of stocks. Not every single security has an option. Okay. So that's first. They're not available on every single stock. When you go into a company like a platform like TradeStation, you can look up a particular stock symbol and see the options. You can also go into Yahoo investments and type in options. And you can also look up a symbol there to figure out if it has the capability of options. But simply put, options give the stock owner, or sometimes people who don't own stocks, a very leveraged way to get into stocks. You can bet up on the, as far as it going up, and you can bet down. You can also use the options to protect your stock. Let's say you own Apple and you're worried that Apple's going to fall in the next 2 weeks, but you don't want to sell your stock. You don't want to get out. You just want to make sure you have protection. Well, you can go in and you can buy insurance, and those are called puts. That's another term for put, is insurance. I call it insurance. But you can buy a put to protect your investment down to a certain level. Say Apple's trading at 200 and you wanted to buy protection at 150. So you could buy a right to sell your stock at $150 for a set amount of time and pay somebody a premium to make them take your stock. So that kind of protects you. That's a way that options are used. It's
okay,
very.
So I don't mean to interrupt you. Okay. Now you hear some of these guys, you know, that are on BetMix that swear them down that they're these trading gurus on BetMix, and they're talking about longing and shorting and, you know, all this other stuff. Is options the same thing as longing and shorting of a stock or crypto?
Yeah, I mean, when you let's break down the term long and short. When you long something, if you buy stock, technically you're long that stock because you want the stock to go up, right?
Okay.
So you're long. So when you say the word long and short, a lot of people say, man, that's really high leverage and you could lose your ass. Well, yeah, you can. Just like if you buy a stock and it goes to zero, you've lost your money, right? But if it goes up, you gain. It's the same thing with a put and a call. You can be exposed only for the amount of money that you invest at that time. Or conversely, you can, and this is for much more experienced traders, you can can be naked and can be on the hook for an unlimited amount of money. But usually, typically,
we're going to be naked and afraid.
Naked, you can be.
That's a good show, by the way. That's a good show. You know.
But like in my example I was giving you of Apple, right? So you want to protect your stock down to $50. Let's say CCB likes Apple at $150, and he's perfectly fine owning it at $150, and I'm not, right? So I paid CCB $5 a share for him to promise to buy my stock at $150. Right?
If it goes down to 150, right? Okay.
Right, exactly. And I choose, and I would make that choice to choose to make you buy that stock at $150. So you were like, heck yeah, man, get $5 now, and if I don't have to buy it, I get to keep the $5. And if it goes to $150, I'm fine owning Apple stock at $150. So that's a win for me all the way around. But in a sense, you're naked in that option, CCB, because you're forced to take that stock. Because what if that stock goes, what if Apple went to zero? And I'm like, I paid CCB $5. He has to buy my stock at $150, even though the stock's at zero. You still would have to take that obligation on, unless you got out of your obligation by buying yourself back out of that put.
All right, so we got a question for you. Do you need to be an accredited investor in order to do options in America?
I don't know if your health rap, if you're speaking about being a U.S. citizen. I'm a U.S. citizen, obviously, and I'm not an accredited investor. I'm an average guy. I have no certificates, no licensing, any of that. So no, if you're an American citizen. I don't know how it works outside the U.S.
Where are you going, Anna? Your plane's about to take off. Lord have mercy. What's up, Whale? How you doing? Anyway, all right. So, okay. So you don't have to be an accredited investor. Anybody can do it.
No, you don't.
Just like crypto, flying down to Florida. All right, cool. Headed to the Bahamas. Hey, I hear you. You know what? I heard that there's something in the Bahamas called a triangle. You better watch out for that. Fly around that thing. You know what else has a triangle? The Illuminati. Anyway. Oh, fun scaring through the heavens. Hey, Wednesday I'm going to be on a plane, so I can't say nothing. But okay. So anybody can do it. Yep. So basically, what you're doing.
I was going to say, matter of fact, when you open up some of these accounts, like an E-Trade, like a Charles Schwab, they will actually give you a dummy account, So you can fund it for $1 million, you know, play money.
See, TD
and then
Ameritrade didn't do that. They didn't offer that for me.
Oh, really? Well, I know TradeStation offers that for its clients.
Okay.
So you can go in a dummy, and they'll give you basically dummy money, and you can go in and place trades, real actual trades, and see how those trades play out for you.
Okay.
And that way you kind of get practice behind you. The basic strategy that most people are familiar with options is what's called a covered call. Okay.
Okay.
So to get into that, I'm going to share my screen. Let me pull this up here.
All right. So everybody, while he's sharing his screen, learning how to share his screen, go get your pen and piece of paper right now, because we're all going to have to take notes on this, because I already, am all crazy trying to figure out what a call and a put and an underarm and a naked is. And, it just seems like some frat party to me right now. So make sure to go get your pen and piece of paper so that you can keep up with all of these terms. Now, when you share your screen, make sure don't have any like clown porn or nothing on there.
Ass midgets.
Ass midgets. Yeah, that's for Crypto Austin. Did you forget how to share your screen? Nope. Okay.
Making sure I put the right.
Okay. All right. So here we go.
Okay. So I'm just giving you an example. This I pulled up. If you look here in this top left box, right? This is Tesla. Everybody's familiar with Tesla, right?
Yep.
Elon Musk, right? So if you look at this screen now, obviously nothing's being traded right now because it's after hours. Options do not trade after hours. They only trade. My Eastern Standard Time for me is 9:30 to 4 o'clock Monday through Friday, Eastern Standard Time. So That's the only time I trade. All right. So what you're looking at is you're looking at this. I'm circling. This is the current price of Tesla right here. It's $259.82. So that's the current price, right?
Okay, that's what it closed at on Friday.
Right. That's right. So what I pulled up here is what's called an option chain. First of all, with options, one thing with options, there's always an expiration date. That's the very first thing you have to learn about options. So these particular options expire Friday, October the 26th. Okay, that's written right here. Okay, coming up. You can pull this drop-down menu and you can see there are a lot of different expiration dates. Obviously, as the time goes out, the more value the option is going to have because of time. Obviously, if the stock's at 259, the likelihood of it going to 100 in the next week is slim to none, but that might be a likelihood further down the road. So as you get further down these option chains, you can kind of see the time zones. But for today's purposes, we're just going to talk about the expiration next Friday. It's coming Friday the 26th. Okay.
Hey, Miss AOG.
So if you look at this middle line right here, this is called the strike price. Okay.
Okay.
So let's go to the current price. So the 260 right now. So basically it's saying at $2.60, at $260, right? That's the price it's saying. So it's at 259 right now, right? So it's 260 is what I'm picking that level out. You can pick any level you want. Okay. Let's say you own the stock. Let's say CCB, you own the stock.
Okay.
And you want to make some rental money, right? Because you own the stock and it's just sitting there not making you any passive income. You're just owning it. But you're okay selling the stock too. Okay. So let's say you're fine selling the stock at $270. You own it at $259, and you're fine selling it at $270 a week from today, next Friday. All right.
Okay.
Sell per share right now $3.90. You could make $3.90 per share for the right to sell that stock at $270, or basically letting someone buy your stock for $270. You're getting paid $3.90. So let's say I'm fine owning the stock at $270. I'm like, heck yeah, that thing shoots up above $270. I know what's going on up to $300. Mm-hmm. So I'm going to go ahead and pay $3.90 for the right to buy his stock at $270. So
okay, so if I own, is that per share or just $3 no matter how many shares I've got?
Per share.
That's
per share.
Okay.
Now these operate in contracts. Okay. Options operate in 100 share blocks.
Okay.
So you have to have at least 100 shares of Tesla to make this trade. Okay. So you would take $3.90 times 100, which would give you, what was that, $390? Yeah.
Yeah.
So you would get paid $390 right now, and you're going to keep that $390 no matter what happens. And if the stock finishes above 270 by close of Friday, you forfeit your stock for $270. If it does not close above 270, you keep your stock. You just basically got rent money for a week, $390. Does that make sense to you?
Okay. So let me make sure I understand this. So I am betting. So basically, I'm betting that it's not going to hit 270.
And even if it does, you're fine selling it for 270 because you bought it
at 259. So I made an $11 profit per share. Plus, I'm going to make $390, and then they're going to be paying me $200. So, yeah, okay, that's a nice chunk of change. So let's see. Okay, so. All right, so let's bring the calculator over here. Now you're not going to be able to see this. Oh, well, okay. Well, you won't be able to see mine.
I can. So let's just say on Friday you bought the stock. I'm going to round up and make it easy, okay?
Okay.
So say you bought the stock for 160 on Friday.
Okay.
Right? And you're fine selling it for 270. So you bought 100 shares of that.
Yep.
For $26,000, right?
Okay.
Okay. So you're going to make right out of the gate, if you do this trade opening on Monday morning, you're going to make $390. So I'm going to pull up a second calculator. Okay. So right out of the gate, you got back $390 of your purchase price. Okay. So now you've got $5,610 invested in your stock.
Okay.
If the stock does not close above 270, you keep your stock and the $390.
So basically, I've made $390 profit
For doing nothing.
doing nothing. Okay.
Okay. That's now if the stock finishes above 270, let's say it finishes at $275 on Friday at 4 o'clock. All right. So remember, 25,610 is what we have invested right now because you got the 390 that's yours to keep no matter what.
Okay.
Okay.
What's up, chat?
Say it goes to 270.
Okay.
So say it goes to 275, right?
Okay.
So you're only going to be able to sell it for 270 at close. Okay, because that's the guarantee you gave.
That was the deal that you made. Yep.
So you're going to sell it to 270 at 100 shares. Remember, we got 100 shares. You're going to sell at $27,000. You're going to get $27,000 back in your account. Okay. Because you sold those shares at 270, no matter what the price was. Even if it went to $400 on that Friday, you still have to sell your shares at $270.
Ew.
Okay. Right. So you remember that's one of the downsides. Now here's the thing, right? So, but you got to look at what you made though, right? You made $2,000 off of $25,610. You made, what was that? What was the total you made on that? Minus 25,610. $1,400, right? Yeah. On a $25,000 investment in a week. If it did that, I'm not saying I'm using this as an example. Please understand, this is an hypothetical example showing real, actual numbers. What you can do, you can pick any strike price in here and see the premium, right? So the higher down that strike price you go, is less premium. Okay, so if you pick down here, it'd only be, what is that? 62 cents. What is this right here? You took 280, you get $1.79, but you're selling your stock at a higher price.
Yeah.
So you as the investor have to make the decision, is this worth my time? And am I willing to own that stock? It's a very, very safe way to trade options. It's basically you're getting rent money on your stock. And you're probably asking yourself, why would anybody pay me to buy my stock at 270 when it's at 250, right? Well, if you're the guy who thinks the stock's going to go to 300 and you don't want to spend $250 per share because you don't have it, but you do have $3.90 a share, for $390, you can control 100 shares of that stock. So let's say I didn't have $260 to get into Tesla, but I did have $390. So it took $390. I could basically own those shares of Tesla at 270 for that full week. So if it did go to 300, I can make that difference, if that makes sense. Am I talking too fast or going too quickly for you?
Yeah, Mike, we already covered that not all stocks, not all stocks have options. Okay, so here's where I'm confused. Okay, so you bought stock at $250.
200, say 260, because that's
260. Okay, I don't have $26,000 to buy that from you.
Right.
But
right.
I have $390.
Right.
Okay, so if it goes above 270, so let's say I paid you the $390, right? Mm-hmm. Yep. So what happens if I don't have the $27,000 to buy the stock from you in the first once it hits the 270?
Okay, well, we can cover that, right?
I mean, is that money that I'm supposed to have in my pocket? Is that money that the stock makes? I mean, how does that work?
Okay, so if I take, okay, now first of all, what I'm doing is buying the right? So I'm buying the right at 270. Okay? So I'm buying that right at 390 to take your stock. Okay, so and you're obligated to give me that stock. I'm not obligated necessarily to buy that stock. I can get out if I want. I'm not obligated to. But the reason I wouldn't,
but you have to offer it to me at that price, period, whether I want it or not.
Whether you want to sell me this, yeah. Let's see. If you own the option, the person who has the stock has to give you that stock if you want that stock. Is that
okay?
But you don't have to take it. It's not something that's just forced upon you to take it.
Okay.
Does that make sense? So if I have the $390 and I pay you CCB for the shares,
okay,
I'm out the $390. I'm never getting my $390 back.
Okay.
But what that means for me though as an investor is if that stock goes to $300, I made $30 on the difference, because come Friday that option is not going to be worth $3.90 anymore. It's going to be worth the difference between 270 and 300. It's going to be worth $30 instead of 390. Does that make sense?
I think so.
So if I bought at 390, okay, if I bought at 390 for 270, and on Friday the stock goes to 300, the difference between 270 and 300 is $30 increase in price. Because I own this option is now worth $30. Because I can make you sell me your stock at 270 and turn right back around on the market and sell it for 300.
Okay. All right. Okay. I understood it better that way when you said it like that. PaceCarMike says you can buy the option back before maturing.
Yes. And I was going to get into that. I was just trying to cover a simple way.
So what's the difference between the bid and the ask?
Well, it's just like any other security that you trade, just like crypto. When you go to the exchange on arbitrage, arbitrage.co, and you look at their exchange, there's always a bid and an ask. They're the sellers and they're the buyers. That's the bid and the ask is the
okay.
So
so somebody's willing to pay $3.90, but some people are wanting $4.75. Okay,
yeah, that's exactly right.
I just want to make sure I understood that correctly. Okay,
$3.90. Okay, so that is correct. So, but Mike is right. So let's say, okay, let's give the example of the $390 example, and you own that stock. Okay, you own the stock. You got rental money, the $390 rental money, right?
Okay.
And let's say that stock goes to $271, and you're like on Friday before 4 o'clock. Okay, if the stock's at 271, and you're like, well, I want to keep that stock. I don't want to sell it for 270. I'm only going to make $1, right? More. So you can come back over here, and this is now going to be worth maybe $1.05 versus $3.90. Mm-hmm. So you can buy your right back for like $1.90. Okay, so you don't have to get rid of your stock.
Okay. So
it's like an
what's a good site to trade stocks? It depends on what type of trading you're talking about. But if you're talking about, today we're talking about options trading, which is completely different than just going and buying stock and holding on to it, or day trading or anything like that. Options is completely different. Would you say it's consider? I mean, is there a mathematical or a historical data on this stuff, or is it pure speculation?
The historical data is based on the stock. Okay, Tesla is a very volatile stock in general, so that's why there is what's called the cost of an option is called, right? That's the term they use, technical term. So the higher the volatility of the stock, traditionally, the higher the premium for the options get, right? You probably wouldn't, if we went, I'll give you an example. Tesla's high volatility. If I went up here and went to McDonald's,
okay,
this is a stock, right?
You have to know how to read the charts. Yeah, exactly.
Right. So here's one that's stable, right? And this is going out the same week. Okay, it's the same week we just looked at Tesla. Yeah. All right. The stock's currently at 68. Okay. So if you went down here to 170, just $2 more than the current price, you see there's no really, it's not a huge premium. Whereas you went 270 with Tesla, you saw that $4 price. We went $2 above the current price of the stock in McDonald's, and it's only $2. It's because the likelihood of McDonald's going to 168 to 170 is likely. It's not likely that McDonald's is going to go from 168 to say 198, a $30 swing in a week.
Which is why the higher you get, the less amount that people are willing to pay you.
Yeah, exactly. Because you see this 22-cent option, see this 10-cent option for $180. The chances of McDonald's going to $180 is probably not going to happen. Okay,
not
so
in
that's
that
why
week.
It's 10. Not in that week, but let's say let's draw this out. Let's say you were betting January 19th, January 2019, Friday the 18th on that month.
Okay.
So if you pull that up, right, pull this down, now that 170 was $2 over there. Now it's 475. That 190 is now 43 cents. They're still saying there's not a big chance to go to 190.
Okay.
This is another good way. Also, this is another good way. If you're thinking about buying stock and you want to look at the volatility of the stock, you can go to the market on the options and see how volatile it is based on the premium of the options and how far out they go. So this is basically people betting on the stock's volatility is what this amounts to.
Well, we're definitely getting a lot of information on this, and I don't want to overload people, and I know I'm getting overloaded, but before we talk about anything else or anything like that, can you break down each one of the columns and what that means to me, the investor, the person that wants to do the options?
Okay. Well, first of all, I want to say one thing. What I was covering today, or talking about today, is the simplest form of options, which is called covered calls. That was an example I gave today. That's traditionally most IRAs, most retirement accounts will let you do covered calls because they're very safe, they're very effective, and they're very good for passive income. So that's what we were going over today. I know there are a lot of other strategies that we can deploy that we can go over in future videos that are much more complex than the covered call. Okay. But I just wanted to throw that out, kind of covering only a very, very, very small percentage of.
And maybe what we can do is once we get the basics down, just like with chess, there's so many different strategies. You get the basics down, and then we could break it down into this strategy and that strategy, and things like that. Anything and everything that you want to share with us, we'd love to be able to use that. There are people out here that may find this interesting. Maybe it is. For we talk about diversification so much on this channel. and this is dealing with real stocks. This is not crypto. Okay, this is real stocks. This is another way to make passive income. And I mean, what would you, and now I understand, you've done well for yourself and everything like that, but how could the blue collar worker, before you get into what each one of the columns mean, but how does the blue collar worker that's only got 100, 200, maybe $300 extra, how can they start in with options trading?
Okay, so basically what they would need to do is very first thing they need to do is understand the underlying asset, okay? And that's what that means is understand the stock first. The stock is the foundation. Okay. So if you want to invest in McDonald's, if you want to invest in Apple, whatever stocks you want to invest in, it's key to understanding do your research on your stock, okay? That's the first thing. Okay. The second thing is go open up an account like a TD trade, like a trade station, like a eSecurities, go open up an account and start playing around and learning. Just get in and do it. Just do it with dummy money and play around with it. And you can go in small. You don't have to go into a Tesla at $270. There's stocks out there that are $3 and $4 that have options on. Okay. I just picked these random stocks because most everybody's heard of them. There are tons and tons and tons of things to do out there. But most people, when they get started with options, start simply by getting passive income on the current stocks they own. Okay. And that's typically where people get into options. So they go out and they buy the stock, then they sell the covered call and earn that passive income every single week or month, however long you sold the option for. And that's how I got started.
And you got to have at least 100 shares.
At least 100 shares. That's
okay.
right. Exactly.
All right. So we'll wrap this up. If you can just kind of briefly explain what each one of the columns are. We don't want to overload or blow nobody's mind. And then, maybe next week we can do a whole nother stream. I know I'm going to be out of town next week, but we'll try to see what we can do and maybe go a little bit further. We're going to take this in baby steps because this is a lot to digest. It really is.
Oh yeah, absolutely it is. I mean, it took me like I said, I've been doing this for 9 years and I still don't have all the answers. I'm still learning. So it's definitely a process.
Okay.
And to give you an example of returns, I know people are always like, how much money can you make? I personally don't risk between 2 to 5% per trade. Okay. Every trade I make, I don't risk more than 5% of my total balance. And I trade generally around 2 to 3% of my trade, meaning that if you're trading with $1,000, you would not risk more than 5% of that trade. So what's that? That's $50. You would not risk more than $50 per trade. And the reason why is you don't want to blow your stack on the first trade. You know what I mean? You kind of learn as you go. So I recommend, getting your feet wet a little bit by a little bit.
Okay.
Now, to give you an example on returns, getting back to that original example, I trade with about $100,000. You don't have to trade that size. That's just the size that I've worked myself up to. Okay. No way you can start with as little as $5,000. That's as little as you would want to start with. But I had 100K last year. I made just about $85,000 last year, from calendar year on that 100,000. Now, I know that doesn't sound like a lot in crypto terms, and it's not. But you have to understand, in traditional market, you're not going to get 85% return, on your money in a year. It just doesn't happen. So that kind of gives you an idea of what you can make in options. And by no means do I do options full time. I run a full-time construction company. I trade cryptos. I trade futures. I have a family. So it's definitely something I do part-time.
Okay. But that if someone does want to do this full-time and they have the income to do it, I mean, the possibility of making six figures is easy, right? I mean, not necessarily easy, but you know what I mean.
It's not easy. It takes time, and it takes patience, and it takes effort. But like I said, I do this part time, and I made $85,000 on 100K. So that's almost triple digit income. If you think about it.
Yeah.
So you just need to take that. If I had the time to manage it, I definitely could make a lot more than that. Definitely. I just don't have the time to sit there and capture every movement in the market.
Okay. All right, well, I know I told you, how many trades do you make a week?
For me, I make about between 2 to 3 trades a week, and the majority of my stuff is buy and hold in options. I'll buy. I don't ever own. I've gotten away from owning the stock. I now basically either play the long side or the short side, depending on what I feel the stock is going to do, and I make about 2 to 3 trades a week.
Okay. So let's break down these columns real quick before we get off on something different. So the left side, the calls. What are all the columns here? So
whenever you look at it, this is called an option chain, right? This is called an option chain, right?
Okay.
This is the stock symbol of McDonald's. Until we get into further explanation, this is just keeping it simple. The single just means it's a single spread. If we wanted to look at multiple spreads, that gets real confusing real fast. So we just kept it simple. This is your basic option chain.
Okay.
This is the expiration. So when you click on this, you can find the different dates, always on Fridays, right? Mm-hmm. And this M means monthly. This is the monthly option. These are the weekly options. So it basically just means these are the weeks, then a month. So if someone says, I want to trade the monthly option, you look for M and the month that you want that expiration. So these are the months that option expires in. So let's say you got paid that $3.90, the stock didn't go to $2.70 in that week, that option expired. So this is when the option expires.
Okay.
Worthless on that. Okay. So you can pick your time frame. This is the strike level. Strike levels mean this is how many strikes do you want to see? Do you want to see 50? And a strike is just the price at which you want to purchase your option for. Okay. If you just want to limit it down, you can do 30, and it will show you the 15 below the current price and 15 above the current price. Okay. This is I don't really play with these. This doesn't really come into play till later down the road.
Okay.
For explanation. This line here is your typical, your last stock price, your net change, your bid, your bid, your ask, simple. High and low of the day. Obviously, we're not trading right now.
Yep.
And then volume is how you can trade on that stock. Okay. It starts here with your strike price. We just went over strike price. That's the price of the option, right? So you've got calls and you've got puts. A call is basically you're owning the right to control the stock at a certain level, meaning you can get rid of you're owning the stock at 125. Okay. A put is the other side of that, which is kind of confusing, but it's the same, works the same at 168, and you were worried it was going to go to 120. Well, you could pay somebody. You would pay somebody 48 cents to take your stock at 120. Okay, and that's insurance for you, meaning that you're protected down to 120, and you can make somebody take your stock at 120 if the stock went to zero. And for that, somebody's willing to get paid 48 cents or 15 cents. That's between the two, if that makes sense. But we can cover puts at a different later.
Yeah, we can do puts next time.
Yeah. So that's the two different sides of the coin. Okay, so you've got your bid and your ask for your call, which is the same thing over here. That's the buys and the sellers, just like in arbitraging internal exchange. Your open interest, that's how many contracts are out there. That's how many people are interested, how many contracts are interested in this exchange, in this price point right here. So there's 424 contracts. A contract is 100 shares. Remember, it's 100 shares is a contract.
Okay. So there's already 424 people that have already agreed to work out some kind of a deal right there.
Yep, 424 contracts. Not necessarily people, but contracts. Like I might want 4 or 5 contracts, of that 424. Okay.
Oh, okay.
There's a lot of interest here. And what that means is there's people that's put bids out there. You can't see all the bids, but in the internal exchange, when you look at arbitrage, you can see everybody's wanting to sell price and wanting to buy price. That's the book, the order book, right?
Yeah.
So there's an order book behind this bid and behind this ask. If we dissected this, you would see people wanting to sell for $51, $55. You'd want to see people buying for 44, 43, 42.
Okay.
So there's a whole book of numbers, and that book represents this open interest, if that makes sense.
Okay.
So this is called delta. The definition of delta is it's at the degree at which the option moves with the price. Okay. The closer this becomes to 1 means that as the price of the stock changes, so will this option price. Okay. The further you get away from 1, okay, like down here, this doesn't move very much with the underlying stock price. It moves out of speculation, not out of the actual. So let's say it basically, if you got a 1 here, every time this stock price changes, the option price would change. Okay. If you got 0.02, this is going to move a whole lot before you see any movement on this price over here. Okay.
Okay.
So if it's a 0.2, further away you get from 1, the less likely it is to move with the price of the stock. It's going to take a whole lot of movement for that option price to change. Okay. And then this prob OTM, this is the probability of out of the money. Okay. Out of the money means what's the likelihood of it being out of the money. Out of the money means the closer you become to 168, the closer you are in the money. Okay. And that's another term that takes quite a bit of explaining to do.
Okay.
Something I use a whole lot, but it takes probably take about 45, probably 20 minutes to explain what out of the money is. But it's something that I don't really use a whole lot.
Well, I definitely appreciate, you coming, you've answered several questions. This is just the beginning of this. And I know that as more people, get interested in options trading, as further along in, the training, that of you teaching me how to do this, and the more questions we're going to have. So if you are interested, this is what I want, guys. I want you guys to do right now. Okay, if you hear this or you watch this later, go over to TradeStation, make you an account, and will they automatically give you the dummy account, or do you have to do something different?
You have to sign up. I mean, you have to go through the whole. Now, first of all, understand something. The link that CCB shared, we don't get any kickback at all from that. There's no. We receive no referral
or anything. That's you guys saw where I was just on there and open an account right here. This ain't no referral or anything like that. That was just the site that I was on.
Right. Let me look up this other one that's also a good one. I'll see if I can put it in the link. It's also a good one to learn on.
Well, you're a moderator, so you should be able to put it in there.
The Think or Swim platform with TD Ameritrade. That is a very, very good one to learn on as well.
Okay.
Let me pull this link up.
Well, if you're now, please understand why I'm telling people to go to TradeStation, because that's what you're teaching us on.
Right.
So, go over to TradeStation, open up an account. You do have to KYC. I mean, this is legit freaking stock trading. Okay. So yeah, you're gonna have to KYC. Go over there, KYC, and you'll be able to get the dummy account and, start learning. Have your dummy account ready for the next time that we come on. We'll announce it. And of course, maybe I don't know. It may be the next time that we do this, it may be 2 episodes down, but have that account ready, be KYC'd, so that we could do some, I guess, I don't want to call them dummy trades.
No, we can open up of play with it and see, and actually put in some trades, look at how the trades are made, how to place a trade. That's important.
Okay.
But yeah, and there's a lot to cover. Please understand that we could go for hours, really. So I jump around a lot because I'm not a teacher by trade. So I'm just trying to share with you the things that I know and how I started learning on my level. So please understand, I don't have all the answers. And if you have questions and you want to know more, I'm in Telegram under Mad Dog. Please feel free to hit me up. I'll share with you information as much as I can and try to help you through any kind of sticking points you might get into when you open up an account.
Yeah, but do me a favor, guys. He has a family too. He's enjoying crypto. He works. Please, only try to hit him up when we do these episodes. He'll block off some time and say, hey, look, I know tonight, Mad Dog, was kind of last second. And, I was just like, what I do, what I stream about, PacecarMike, we didn't even scratch the surface, and you're exactly right. You should have seen them trying to explain this to me in Vegas back in July. But, I want you guys to learn. We can literally say this is my journey because I'm learning. PacecarMike is a big options trader as well. He loves his stocks. We're going to keep doing this. I know that my schedule is kind of crazy with, I'm flying out to Texas Wednesday, and then I'm flying out to Vegas on the 30th for the CryptoCon. So I'm going to be super, super busy. And, I'm bringing my laptop, but I'm not bringing all of my equipment. So, but we will get all of this stuff out there to this as quickly as possible. So, any last questions for Mad Dog before we call it a night? Just really simple about anything that we went over tonight. If you need the link for TradeStation again, please let me know. Will E-Trade account work with this site?
I've never used E-Trade, so I'm not familiar with E-Trade. I know that a lot of my friends in my options trading community do use Thinkorswim a good bit. I've never played around with Thinkorswim or E-Trade. I've always been a TradeStation guy, so I'm not sure on that question.
Yeah. So, worst case scenario, Sleven, make the TradeStation account, play with the dummy money, learn how to do it, and then you're able to implement what you've learned through this training course, I guess if that's what you want to call it. Which, by the way, guys, we are not charging for this, unlike other YouTubers. This is free information for you guys. We're here because we care about you and we want to teach you guys things, and to educate you, not to make $1 off of you. Unlike some people, we won't say no names, but PacecarMike uses Fidelity. So, but Mad Dog, I appreciate you, sir. I appreciate you coming on. I know it was like last second. We had been talking about it, but I kind of just hit you off last second. You was investing in Netflix before you came on here. But I want to say thank you very much, and we will definitely plan this a lot better next time. Okay, I will then call them tomorrow and find out. Thanks. Okay, not a problem. So... I hope you have a wonderful night. I hope everybody out here in YouTube land has a wonderful night. And, hopefully everybody understands that, as always, War Pigs is out to make portfolios green again. It's not all about crypto. It's about diversifying. We're going to talk, about options trading. We're going to talk about real estate. We're going to talk about all this kind of stuff, ways for you to make passive income. All right. So keep tuning in. We appreciate you very much. If you're down with making money, we got 2 words for you. War pigs. Ladies and gentlemen, boys and girls, children of all ages, I appreciate all of you for tuning in tonight.
I for one and one for all, about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah. All for one and one for all, we about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs, yeah. War pigs, we the rawest war pigs, yeah. Now I'm about to get it started. Don't be an adversary, cause we'll leave your ass departed. We do it real, yeah, there ain't no other way regardless. We is the rawest and hardest, but yet we steady remain flawless high. So pick a cemetery, best believe we very scary. We shred them up and bury, pray to Jesus Christ and Mary, that we don't turn on you and leave your body bloody blue. If we get a hold of you, there ain't no telling what we do. I for one and one for all, about to break you all. We tear through enemies because they soft as fucking claws. War pigs, we the rawest war pigs.